another video. I'm a bit late, but here's the new video. So before I go further, I'm gonna put a link to my subscription, a monthly subscription of £30 to receive signals from me. Anyone that's really interested to do that, the link is going to be below in the description. Anyway, let's get started with this video. So in this video, I'm going to talk about how I went by with my FTMO, and not just how I went by with my FTMO, how I go by with my trading overall, basically, because I feel like a lot of people are talking about how they've passed, but they're talking about, oh, look, I passed, guys, I did well with my trading, blah 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 blah, but they're not really talking about how they did it. So they're just showing off, I feel like, but they're not really talking about how they did. They're not sharing any information. So I'm going to share some of the information that I know, okay? Some of the information that I use in my trading all the time. So first of all, the one thing that we're going to focus on is knowing the difference between commodity pairs and let me just get this out there. Commodity pairs and safe haven currencies, okay? So if I scroll down here, so let me just move this to the side, okay? Put that there. Okay, so if I scroll down here, if I click on this thing here, and you can see here I've got what you call the commodity pairs already grouped, and I've got the safe havens. Okay, so from what you know, a safe haven is basically when there's economic crisis, like right now we had COVID and all this happening at the moment. When you've got economic crisis happening, safe havens dominate. So it becomes what you call a risk on market. So it's a risk on market. You've got your US dollar, Japanese yen, and Swiss franc. So these are what you call the safe haven. So most investors put money into safe assets where there is no risk. So the Japanese yen and the Swiss franc are literally one of the biggest ones. US dollar not so quite, but Japanese yen and especially Japanese yen is a very big safe haven, and the Swiss franc as well. Swiss franc is also another safe haven. So you can see here I've got my safe havens in one little group on TradingView. Okay, so it's very important that every single day when I start my trading, I need to know the direction of the market. So direction is really, really, really important. So I come and look at my safe havens to actually see what is going on with the safe havens. Are they pointing up or are they going down? And when I look at this, I don't look at this on the daily time frame. I look at this on the 1 hour time frame. Okay, so I use the 1 hour time frame because if I'm trading that day, I need to know what's going on that day. So I use the hourly time frames and the minute time frames. Okay. So another one is the commodity currencies. Okay, the commodity currencies when the risk of market. So these are currencies that are influenced by commodities like oil, corn, copper, especially oil. Oil is basically the number one. So you got the Australian dollar, the New Zealand, and the Canadian dollar. Okay, these three currencies are heavily influenced by commodities. Okay, so when the market is risk off market, these you normally see these currencies normally they thrive, they perform really well, and things go well. Okay, but when it's a risk, when it's a risk of market, safe havens go down. When it's a risk on market, safe havens go up. And so the main thing is you need to know which is which on that given day. It's important because when you don't know which is which, and you just get on the market and you just start doing whatever, it can lead to a lot of things. It can lead to a lot of failures because you're not really, catching up to know where is the market heading, where's the money flowing. This is what I should say. Not like where's the money heading. It's more like where's the money flowing. Is the money flowing that side or is it flowing that side? So you actually, it's very important for you to know what's going on in the market. Okay. Another one that I generally want to show you guys in terms of direction. So this video is mainly purpose about direction because direction is important. It's very underrated, but direction is important. You can't just wake up and just say, I'm going to trade Euro USD. You kind of need to know the direction of the market. For every market, you need to know what's the direction, okay? So another one that I use, so I've got all the countries' indexes, okay? But I don't really look at all the other indexes. I normally just look at the dollar index. That's the most important one because all these other indexes is basically against the dollar. So if it's the BXY, which is the British Pound index, is basically the pound versus the dollar, and the SXY is basically the Swiss franc versus the US dollar, but the DXY is unique. It's basically the US dollar index, but it is against the euro. So a lot of people didn't know that. Maybe you know this. I don't know. Comment below if you know. The DXY, the US dollar index, is basically Euro USD inverted. So it's USD euro basically. Okay, so I use this every single time to give me direction of the US dollar. So if you're looking to do any shorts, or you, but in the current market right now, what's going on is you see the US dollar index is dropping. It's dropping crazy. So that's why I said if you're looking to do any sales, you need to be watching the US dollar index. If you want to get involved in any US dollar currencies, you need to watch what's really going on here. So that's when your technical analysis, whatever technical analysis that you know, that's when it comes in. So this thing gives you direction of the US dollar. Oh, what's going on? Oh, okay, so the US dollar is starting to drop, so I can also go buy my Euro USD. So, but what I said about the US dollar index and the Euro USD, I'm actually going to show you now why the similarities between these two. It's not similarities, but the connection between these two. So we got the US currency index over there. So I'm gonna put USD Euro. Okay, and you can see basically this is USD Euro. There you go. This is the US dollar index. Okay, and this is the USD Euro. So the US dollar index is basically Euro USD. So when you see things like this happening on the US dollar index, it can give you an opportunity to actually go and trade Euro USD and start looking out for buys. To be honest, this is a perfect buy opportunity. It's a really good buy opportunity. I'm actually going to start analyzing it now. Okay, I'm going to draw that and see what's going to put. Okay, it's actually a very good buy opportunity there for Euro USD. So yeah, so basically that's US dollar index. I used the two. So if you want to get involved in Euro USD, sometimes always you look at the US dollar index and see what is really happening with the US dollar index. So that one can give you an idea of what's really happening in the market. So let me look at my board. So I've got a board here. Well, I wrote everything that I'm going to talk about in this video. And I feel like I've actually gone... Actually, I haven't said anything. I need to talk about the correlation between the commodity pairs and the commodities themselves. Okay, so let's go to the commodity pairs. The commodity currencies, like I said, is the Aussie, New Zealand, and the CAD. Okay, so with Canada, you know, is the number one exporter of WTI crude oil. Okay, Aussie is it's the second country that reserves the most gold after China. So it's China and then Australia. New Zealand exports a lot of meat and all these other things to China. Okay, so you don't have meat here on TradingView, but these are heavily involved. These currencies only perform when there's some exports and all these other things going on. But the Aussie dollar is heavily linked with gold. So sometimes you may see that the Aussie dollar is performing very well, because if gold is performing very well, Aussie dollar is likely to perform accordingly. Okay, so but the correlation between gold and Aussie dollar is not very strong, but it is there. That's what I would say. It is definitely there. So when I look at US oil, okay, let's get this off here. Look at US oil. Okay, so you can see that US oil had a recovery on the 15-minute time frame. So went boom, boom, had a very good recovery. So I was looking for buyers here. You can actually see. So we had a very, very good recovery for what do you call it? WTI crude oil, and we had the same recovery for UK Brent oil. Now if you look at okay, let's do this. US oil, and I click on Canadian dollar, US dollar here. So you can see Canadian US dollar here, it's in an uptrend. It's been in an uptrend since oil has been recovering. Okay, currently this is the 15-minute time frame, so this can be seen as a pullback to get involved for buys again. But you can see that there's a relationship between these two. So now this market's starting to go sideways. Okay, you can see that WTI crude oil is also going sideways. So Canadian dollar, US dollar, and okay, let's do this. Okay, the Canadian dollar, US dollar, and the WTI crude oil, they're starting to go sideways, both of them, because they're heavily linked. So if I click on Aussie dollar here as well, you can see, okay, we had a massive drop here, but overall, the trend of this market is an uptrend. It's an uptrend. Okay, so what I'm saying is, I'm not saying that the charts look exactly the same. I'm saying when you see commodities start to go up, these currencies here that I got here are likely to go up. They're likely to go up. So you get New Zealand US dollar here. They're likely to go up. So currently here, you can see there's a downtrend going on here. This little down move coming in here. So you can see the same down move on New Zealand US dollar and also. But when we had a little up move happening here, you can see that there's also an up move going on with the commodities and the commodity pairs. Okay, like I said, it's not just like the chart is going to look exactly the same in terms of correlation. No, it's more like commodities are performing, this currency is going to perform. Like you can see here, there's a massive drop coming in here right now. You can see the same thing is happening here. So they in terms of movement, they kind of move the same way. If oil takes off, these are likely to follow behind and take off as well. Okay, so yeah, basically this for me, this is what I look at. I use these methods every single time. I link the two, and it always works well for me. So yeah, this video is purposely about direction. Technical analysis, it's a whole nother level. It's a whole nother level in terms of me knowing when the buyers are out of the market or when the sellers are out of the market for me to do the opposite. It's a whole different type of movement. But this is exactly how I look at the chart every single time, and it has worked for me. So yeah. So this is my video, guys, and I hope you got some value from this video. And subscribe, like, comment. Just send me a video. You know what? Just write a comment of what you'd like to see next, and I'll probably drop that video next. Okay? So thank you, guys. Take care.